Good morning everyone and welcome to another RF crypto video. Today's markets have seen a 1% decrease from yesterday. Yesterday we saw a rally in the whole crypto market due to the fact that Ethereum's Goerli's testnet was successfully merged and all of the tests went through without a hike, which means that the Ethereum 2.0 merge or the proof of work to proof of stake migration will take place in September because all Ethereum's testnets have already been successfully tested and merged. Today the markets are down by 1% and that may be due to a correction. If you can see here, Bitcoin is down by 2.24%, and by correction I mean that the market might have overreacted to the fact that Ethereum's Goerli testnet test was successful. The price increase wasn't commensurate with the news about Ethereum's Goerli testnet. So because it was an exaggerated impact and because the prices increased by more than they should have, today the markets corrected themselves and the prices dropped once again. It hasn't dropped that much. If you look at the coins here, it's a mix of red and green, but we see 2%, 1%, 1%, 2%, 1%. So it's not a massive decrease, it's a small correction, and this in no way erases the gains that were made in the last 7 days. If you see here, Ethereum 14%, Bitcoin 3%, Cardano 4%, Polkadot 11%. So it is a good sign. We are slowly crawling out of the bear market and a mini bull run is taking place. Obviously a bull run isn't only with ups. There are a couple of downs as well when there are corrections, so there is no reason to panic. Looking at the price of Bitcoin, we see that the price has touched the $24,500 resistance level and then dropped once again once the Ethereum correction took place. And we see here that it is still trading between the $23,000 support level and the $24,500 resistance level. And it's doing quite well. I mean, it dropped only a little bit. It hasn't dropped that much. We have a mini support level of $24,000 here. And this is a virtual support level where it is retesting and it hasn't dropped much below it. So I think that this is the lowest it'll go, and now the prices will go upwards, obviously barring any negative news in the markets. If there are negative news, obviously we will see the prices go down even further, testing the $23,000 support level. But if everything remains as it is, prices might stabilize, trade laterally for a bit, but then the breakout will come and the prices will test this $24,500. So a resistance level and shoot all the way up maybe to 25,000, and the next test levels will be 28 and 30,000 respectively. So let's hope for the best and let's hope that this will happen. So crypto entrepreneurs Sam Bankman-Fried and Son are in talks to buy majority of Huobi Global Exchange. So Huobi is one of the biggest exchanges in the world. They're based in Seychelles. They are a crypto exchange and they have a trading volume of over $1 billion per day. It's very few companies that can claim that they have trading volumes of such large amounts. So in a transaction that will value the firm at $3 billion or more, the founder of the crypto exchange, Leon Lee, wants to sell 60% of the firm. So that's his holding in the firm, which would net him about $1 billion. He has already held preliminary talks with Tron founder Justin Sun and FTX founder Sam Bankman-Fried for this transaction to go through. Huobi's existing investors, which include Zen Fund and Sequoia China, they're based in China, were informed about Lee's decision during a shareholder meeting last month, and it seems like this didn't come with any resistance because talks are still going through. And if this deal goes through, it will be one of the biggest ever in the crypto industry. And we know that there is a downturn in the crypto market and has forced many of the biggest firms to cut jobs and cut costs, and we have seen a couple of firms going bankrupt. However, this could be the first instance of a majority stake sale by one of the bigger crypto firms, which will open the doors to takeovers and mergers and things of such that take place mostly on the traditional market. So FTX has been on a buying spree, and Huobi is next on the list. For example, FTX has made a slew of offers to acquire crypto companies during the recent market downturn, snapping up Japanese exchange Liquid in April before agreeing to acquire Canadian trading platform BitVo 2 months later. it has also a deal to purchase BlockFi, which is a major purchase lending platform in the crypto space, for $240 million. They are also eyeing up purchases of Celsius Network and Voyager Digital Assets, which filed for bankruptcy in July due to the UST debacle. So FTX is strategically placing itself to become a leader in the market, and they really want to acquire strategic companies so that they have their arms everywhere in this new blockchain space. And that's why they have been making purchases, and now is the best time to actually make purchases because we are in a market downturn. The companies that are related to blockchain will have their valuations lowered by a lot just due to the fact that the markets are depressed. So BlackRock launches Spot Bitcoin Private Trust. They've launched this trust to give its US-based institutional clients direct exposure to the world's most popular cryptocurrency, which is Bitcoin. The firm said that despite recent market turbulence, it's still seeing substantial interest from its institutional clients in accessing crypto markets through its technology, which means that more and more traditional companies, especially in the US, are wanting to invest in crypto because they see the potential that blockchain and by extent crypto has, and they want to be the first ones to invest before the prices explode. So BlackRock is also exploring permission blockchains, stablecoins, crypto assets, and tokenization. In the Bitcoin Trust press release, the firm said it's been encouraged by a plan for decarbonizing crypto created by some nonprofits such as Energy Web in Switzerland and RMI in the United States. And it's a very important consideration for institutional investors when investing in cryptocurrencies who have previously cited environmental impact of Bitcoin mining as a barrier to adding it to their portfolio. So obviously, companies care about ESG, environment, social, and governance, and it's a very important part of their image. And because Bitcoin has been linked to using a lot of energy, to being very energy intensive, to being sort of a dirty mining system where it releases a lot of carbon emissions, institutional investors have shied away from purchasing it and placing it in their portfolios. And now, because there are a lot more initiatives considering decarbonizing crypto and moving crypto mining to more green energy, institutional investors are becoming more interested in buying crypto and placing it in their portfolios due to the fact that now that stigma that was associated to Bitcoin mining is slowly eroding away. And just by proof, in November, 74% of institutional investors surveyed by EY said that they were likely to divest from companies with poor ESG performance. And this is the case with Bitcoin. Even though it's not a company, it's still an asset. And if it has poor E from the ESG, then they won't invest in it. Binance recovers $450,000 stolen from Curve.Finance. So on Tuesday, hackers stole nearly $570,000 from Curve.Finance, after which the protocol developers said that they had identified and fixed the source of the issue. Hackers managed to find a vulnerability in the platform, they took advantage of it, and they walked away with a lot of money. But Binance CEO CZ said on Friday, or today, that the exchange has frozen or recovered 450 out of that 570,000 which was stolen. And Curve.Finance is a major player in the DeFi ecosystem due to its CRV token rewards emissions, which serves as a source of income for several other platforms. So what happens is that if you stake your coins with, let's say, Binance, Binance will stake your coins with Curve.Finance to gain a income. So let's say that they promise you 7% on your tokens. They will take your money or your tokens, they'll take it to Curve.Finance, they'll stake it there, and they'll get 12%. So they're making a 5% profit. They're taking 12% from your money, and they're giving you 7% of it. And that 5% is their profit margin. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.